This is an update and technical analysis on Bitcoin cryptocurrency here on the monthly interval. Really what we're going to do is dissect every time interval, zoom out from the outside and dissect the internals of this Bitcoin cryptocurrency here on the birth of it, right around that 1 cent range, 10 cent range here. And here we are, primary trend line here off the 2011 lows, plenty of reactionary lows to help validate that. We put in an effectively beautiful divergent high, continuation bearish pattern of a 3 black crow pattern. Snapped this last month officially here, the month of May. We have broke down not the most well-defined sell signal, but definitely one to respect. We have effectively snapped this, and I would favor a backfill the gap here down to that 14,199, 14,1, call it 14,200 price support here on a backfill the gap. We've got the 50 monthly moving average hovering right beneath it at 21,500. I know there's a lot of, most likely to be a lot of buy orders around that 2,500, 22K range, especially when you talk about the weekly, 200 weekly moving average, really in that same spot. But here we are, you know, we've put in effectively a really massive a divergent high here off the RSI divergence. And, you know, you can bake that into as far as a divergent high that just had continued to build there. And effectively, the larger the divergences, the bigger the drop. Huge divergent high and negative bearish divergence here on the RSI to help since building back since 2017. And we've already got the crossover in the MACD. Oscillator already gunning for its zero line to retest its zero line. And so we'll see how that plays out. But these are your buy orders here at 14,200. 62.74. I got 13.11.11. Huge air pocket here if we snap that 62.74. And you know, these are some of your dollar cost average areas here. Maybe a snap of the backfill the gap. Maybe we come back down to retest that 62.74, and I'd suspect a lot of buy orders around that range there. But if we crack that there, that is my maximum buy zone target in my opinion, because a crack of that 62.74, whole lot of air pocket madness here, and down to 13.11 would be a pretty swift drop in my opinion. You do not want to see a crack below this, call it a 62.74.40. That's the big level, because what'll happen if you consolidate here and you know, you'll keep this uptrend. At least you'll keep a series of higher highs with higher lows. And you could, even though it's spelled for a huge, massive correction, that could be a tailwind for the next uptrend up. So that's exactly what you want to see. We'll zoom in here on the weekly interval here. Same picture here. Beautiful divergent highs, negative and bearish divergences that continue to construct on really all three indicators. Very steep divergences now here on oscillator, MACD, and really what I've got here on a potential is, I've had this previous level here at a 38.79 price support, and we are just stabbing it, back testing all over it. This is a perfectly measured target here. If we do get it here at 18.702, here's that 200 weekly moving average I was talking about, zipping in here at that 22.160 support. So again, that you've got two support. You got that 21.500 on the monthly for the 50 monthly moving average, and now the 200 weekly moving average here at that 22 range. So I'd suspect a lot of buyers to be met there. But if we don't get that, we could have a pretty consolidation period. Here's your bear flag flagpole, followed by your flag here, and a perfectly measured target would take you down right to this 1863 level. Call it 18,900 would be a perfectly measured bear flag continuation pattern, again off a beautiful looking head and shoulder, classic looking top here, which you know, could definitely play out on the weekly interval here with this beautiful air pocket here. But we'll see what happens. Still 1264. I got 12,674. I've had it in my previous video as well. But that's the big level right there. That's where you want to see a lot of traders step in, a lot of long dip buyers step in. That will be the full backfill the gap there, right at that 12,674. So we'll see how that pans out. Again, though, huge, massive divergences here. Very steep ones too, already puncturing their right below their zero lines on both the MACD and oscillator. Just pure damage. We got damage all over the monthly. We've got damage all over the weekly interval. Zoom in here on the daily interval, and we've effectively put in a beautiful evening doji star continuation pattern, one of the most beautiful, well-defined ones I've seen in quite some time. That's as good as it gets. Remember, I had mentioned in my previous video off that falling 2 and/or 3 method continuation bearish pattern, and we just snapped it, never looked back, came down here, and now we're just consolidating here briefly. So again, 28,863, that's what you want to watch here on the daily. Beautiful divergent highs, negative and bearish divergences, snapped all below. We did put in a potential divergent low here though, so we could have a counter trend rally coming back to the upside. But you could take a jab here if you wanted to go long, but it's a risky profile in my opinion. And the snap of that 28,863 should take you down my next support level at that 22,678 minor price support there. So that's off the daily there. We'll zoom in now here on the 2-hour charts here. We've got this Fibonacci retracement here at 786 price support. Plenty of little minor reactions to validate that too, as well as that 29,187. We'll snap that primary trend line here zoomed out here. And I believe once we take out that 29,187, you could start scaling in on some short trade positions there to start to gun down for 29 for that 28,863. Once we hit that 28,63, and if that doesn't hold, that could be your potential entry and/or aggressive short trade entry off the 2-hour time frame. There would be a snap of that 29,187. Which would take you down most likely to that 1 Fibs retracement there, 26,549. So we'll see how it plays out. But again, these are your dollar cost average. This is all your really a whole bunch of dollar cost averaging prices that you want to hit. You do not want to see 12,674 go. And in my opinion, that'll spell further damage in the technical indicators here on the weekly, and most likely take it down if we were to take out that, in my opinion, that 12,674 price support. That's you might turn into a multi-year bear market here for Bitcoin. Bitcoin bear market, in my opinion, is a break of that 12,674. So we'll see how it plays out. It's your dollar cost average targets here, and I'll keep you updated if I see any more significance. But so far, it looks like a beautiful looking bear flag continuation pattern. So see how it plays out off a 3 outside down bearish continuation pattern here too, if I forgot to mention that. So plenty of candlestick patterns, bearish continuation candlestick patterns that just continue to grow here and build on multiple time frames, which leaves more evidence that we've got a big problem here. Again, beautiful looking head and shoulder top here. So we'll see how it plays out. Keep you updated if I see anything new. Hit that like and subscribe button.